All right, we spend so much time in class learning how to bring an asset onto the books, right? You know the drill: acquisition, depreciation, all that good stuff. But honestly, what about when it's time to say goodbye? That's where things get really interesting, and that's exactly what we're diving into today. So, let's break down an asset's final chapter. And look, this isn't just going to be some boring theory. This is your survival guide for mastering the end of life accounting for PPE, with a super sharp focus on exactly what you need to know to absolutely crush the LEPA. First up, derecognition. You can think of this as the planned, graceful exit for an asset. It's the moment we officially wave goodbye and take it off the company's books for good. So when does this actually happen? Well, PAS 16 tells us it's one of two things. Either you dispose of it, like you sell it or trade it in, or the company realizes, hey, we're not going to get any more economic benefits from this thing. In other words, its job is officially done. Now here's the big question, the one that always pops up on exams. Did you make money or lose money on the deal? Calculating this gain or loss is everything, but don't worry, the formula is super straightforward. It's a simple three-step process, that's it. First, figure out what you actually got for it after any selling costs. Second, find out what it was worth on your books. And third, find the difference. You have got to make this calculation second nature. And look, it really is this simple. If the cash you walked away with is more than its book value, hey, that's a gain. If you got less than what it was worth on paper, well, that's a loss. It doesn't get more direct than that. Okay, but what if an asset doesn't get to have that graceful exit? What if, while it's still supposed to be a star player, its value just suddenly tanks? This is where things get a little more dramatic. This brings us to a massive topic for your board exams: asset impairment. This is the official playbook for what to do when an asset's value takes a sudden, unexpected nosedive. Let's make that simple. Let's say your accounting records show a machine is worth 100,000 pesos. But if you tried to sell it or use it today, the absolute most you could get from it is 70,000. That 30,000 peso gap? Boom. That's your impairment loss, and it goes straight to your income statement. Now, this detail right here is something you absolutely cannot forget. The recoverable amount is always the best-case scenario for the company. It's the most money you could get for that asset, whether that's by selling it today or by continuing to use it to make money. And the key is you always take the higher of those two numbers. Okay, enough talk. Let's see this in action with a classic example. We'll use the kazoo company. And you're going to want to pay super close attention to these numbers because this is exactly how it'll look on your exam. Okay, look at this. The asset was sitting at the books at 120,000 pesos, but its recoverable amount, only 96,000. The carrying amount is higher, so we have a problem. That difference, 24,000 pesos, is the impairment loss, and you recognize it in your profit or loss right away. That's a great question, right? The market's always changing. So can you reverse that loss if the asset's value goes back up? The answer is yes. But, and this is a huge but, there is a very, very important limit you have to remember. And this right here perfectly explains the ceiling rule. This is the number one trick that examiners love to use. You can never, and I mean never, reverse the loss to a value that's higher than what the asset's normal depreciated cost would have been if that impairment never even happened. It's all about preventing companies from gaming the system and artificially boosting their profits. So check this out. Even though the asset's new recoverable amount is all the way up at 111,000 pesos, we can't recognize a gain that big. No way. The reversal is capped at 21,000 pesos. That brings the asset's value right up to that 105,000 peso ceiling, and not a single peso more. You have to understand this logic. Okay, now for a situation that is super common in Philippine practice, and a favorite thing for auditors to look for: the fully depreciated asset. I like to call it the zombie asset. It's technically dead on the books, but it's still walking around the factory doing its job. This is such a critical takeaway for us here. An asset's book value might be 0, or maybe just a 1 peso residual value, but it's still being used every single day. You do not take it off the books. It stays right there on the financial statements, both the cost and the accumulated depreciation, until it is well and truly retired. Trust me, auditors love to check for this. Whew, okay, we've covered a ton of ground. Now, let's pull it all together into your ultimate study guide. This is your LECPA retention playbook. This is what's going to make it stick. Seriously, take out your phone and screenshot the slide right now. These definitions are the absolute foundation for every single problem you'll get on this topic.
You have to know them cold, no hesitation.
And these are the 3 essential calculations that will save you. Practice them with different numbers. Drill them again and again until doing them is automatic. That speed and confidence is your best friend in the exam room.
And finally, the study hacks. Watch out for these common traps. These are the little details where so many people lose precious points. Forgetting cost to sell, messing up that ceiling calculation. Don't let that be you. Just knowing these traps exist is half the battle.
So why does all this matter? I mean, really, it is not just about passing an exam. Understanding these end-of-life rules is about protecting a company's financial integrity. It's about telling the truth with numbers. And that is the absolute core of your future career as a CPA. And that is our deep dive into the final chapter of PPE. You made it through the toughest part of an asset's life. Keep practicing, review these concepts, and you are going to be more than ready. Thanks so much for tuning in, and good luck with your studies. You've totally got this.